Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some industrial defense stocks, some aero defense stocks, and we're going to look at some small caps as well, because the Russell 2000 was the strongest of the indices today, and the small caps were getting a bid while the many of the large caps were under pressure. Now a big gainer today was ticker symbol AVAV. This is an industrial defense stock. You can see it closed up here nearly over 17%. And so yeah, check out this big move here. It had a giant volume spike down here, a big break above the 250 and 100-day simple moving averages, and then now it's hitting this resistance from back here in January and December. So if it can bust through this 55 zone, it might make a run back up here to this 59 level. That was the previous high from back in December. So you can see it was in this downtrending channel, and so now this break above it is a super strong bullish move. You can see here it's hitting this resistance from before, so this is going to be a tough resistance level to break. If it can get through, like I said, it could possibly run up to 59. Today's candle did bust all the way through that upper Bollinger Band. If it does pull back, you want to see that 100-day simple moving average at 50 there turn into support. That would be the key level to hold on a pullback. Okay, so yeah, if you look here at RTN, this is Raytheon. This is one of the big top industrial defense stocks, and as you can see here, it closed up slightly today. Yeah, with the possible missile strike going on, we could see the defense stocks getting a bid. As you can see here, it's hitting this this top level with March. It's hit this level multiple times. So if it can bust through this 219 zone, then and then what you want to see is a close up there above 220. And that's going to signal that it finally wants to head higher. Above 219 should signal that it's breaking out to that next, to the upside. It has to close above that level. It's currently riding EMA4 support at 217.42. As long as support's holding, this uptrend's intact. This has a very strong multi-year uptrend. If you look here, this is the monthly chart, and you can see here this is from back in 1998. It was trading around $30. It dropped to a low into the teens in 2000, and then as you can see, it's just been on this super strong uptrend for the last few years. Super strong since down here in 2011. And so basically the candles for the last couple of years have basically been riding EMA4 over here at 211 support. So if this 211 212 keeps holding and it keeps closing above that level for the month, I mean, the long-term signal is just to keep riding. This has been a dream long-term investment because it's appreciated so greatly in value over an extended period of time, and it just has a super bullish uptrend. And so right now it created a all-time high there in February. That's the second white candle there, and so now it's going for this month a monthly all-time high close. And so yeah, if it can close above the last two candles, closes on the last two candles, this will be a new all-time high close for Raytheon. And yeah, so this has been a good place to park some money in these turbulent times. And so if you look here at DFEN, okay, this is the Drixon Daily Aerospace and Defense Bull 3 times, and so it closed up it closed up slightly today, and it only traded 78,000 shares. So this is a really thinly traded exchange traded fund, very thinly traded. But as you can see here today, it was hitting this 50-day simple moving average basically here at 51, and if it can close above and turn into support, then it could run back up to the top of this descending resistance line. And so this close above the 50-day simple moving average here last week, that signal that was heating up, it has to get back above that level. and then that'll be the signal it's finally ready to head higher. It also needs to break this middle Bollinger Band at 49.59. It closed right at that level today. You know, it's been holding this 100-day simple moving average at 47.94. You can see all these candles have been hitting that level. You know, it's at a flex point here. Either the 50-day simple moving average is going to break, or the 100-day simple moving average is going to break. Candles forming above the green line signal more upside with 55 on deck. Candles forming below the gold line signal downside risk with this 45 on deck. Okay, let's take a look at Northrop Grumman. Okay, ticker symbol NOC. So yeah, so this has actually been on a 4-day pullback. So even with all the threats of missiles flying and all that kind of stuff with the tweets, this did not get a bid. You can see it ran up intraday today, and then they pulled it back. You know, and it closed near the open. So it did close above the open, but this is a small white, small hollow red candle, and yeah, it looks like gosh, let's see where the open and the close. So yeah, it was very close to the to a bullish meeting lines reversal pattern. So it looks like that I did not check on that to double check it, but it does look like a bullish meeting lines type pattern here. The bottom line is it looks like it could possibly bounce. What you want to see is it get back above that middle Bollinger Band at 347. So if it's trading above 347, that could signal that it's bouncing, and then you want to see it get above EMAs 4 and 8, get back above both of those levels, but turn that 348 back into support, and then it could possibly run back up to the top of the channel at 355. As you can see here, it's been in this sideways channel, and so right now the bottom of the channel is down here around 339 or so, 338, maybe this 337.50 level, and then the top of the channel is up here around 355, with the very top being 360. If it can close above 355, that's going to signal it's really heating up. Right now it's hitting the green line here. This is the 50-day simple moving average, and so if that level holds at 344.50, that is the reload level. This is just like Raytheon, where it has that nice uptrend going, and so that 50-day simple moving average, if it holds, that is the reload zone. Okay, let's look at another big time defense stock here. This is Lockheed Martin. Everybody's heard of this company. Very similar pattern. The tweet, there was that they came out on CNBC this morning and said that missiles were flying, and so everybody thought that was our missiles, and I think that's what got all these defense stocks running. And as you can see, it ran up to 346, but it turned out the missiles were actually fired in Yemen. There was some confusion. There's multiple stories going on. I'm not claiming to be the news guy here, but what happened on the charts is you have these long upper wicks, and so it turned out to be a head fake. It ran up, and everybody's thinking, okay, yeah, this is happening. Some crazy, some military action is happening, and then it pulled back, false alarm, and so basically, this seems like a coiled spring right here, and so I'm not sure, how the markets are going to play it. It looks like they all got a bid. If we do have some kind of arrow strike, and it jumps above this 50-day simple moving average, it would need to stay above that level at 342.50. You want to see that level turn into support. You can see the last 2 times it got above that level, it failed to hold. Once that level finally holds and then it gets above 346, that's when you can see it run back up to test that previous high up there at 358. So yeah, keep an eye on these defense stocks for a close above that 50-day simple moving average. If you look here, here's another one. This is Boeing. And this is another, this is another, defense stock, because they do build the military planes as well. And so, as you can see here, it's trying to break that middle Bollinger Band, currently at 328.18. It's been working on turning that level into support for the last couple weeks here. You can see there's been both of these white candles closed above, and then then the red candles dropped it back below. It's in the process of turning it into support. Once it finally holds that 328 level, then it will be a signal, okay, yeah, this could be getting a new uptrend going. And then what you're looking for once again is a break above the 50-day simple moving average. That's the green line. Break that 340 resistance level with the close above, and that would be a signal that wants to head higher. So yeah, keep an eye on it. If that middle Bollinger Band turns into resistance, it signals that it doesn't want to go. And the downside risk is it comes back down and tests this 100-day simple moving average in this 318 support zone. Notice how these candles bounced off of that level. Okay, let's look at FLIR, another defense stock here. And yeah, so this one is trying to break out of a symmetrical triangle pattern. You can see here there's a descending resistance, right? And then you can see these three candles here are trying to break above this red line. They're closing above that level. And then you can see you have ascending support. Okay, so you have this, the candles are working their way into this what we call a flex point, and that's a point on the chart where either support or resistance is going to break. And so if it breaks below support, the downside risk is it drops below 50, it breaks the green line. That's the 50-day simple moving average at 49.63, and then it would possibly run down to that 100-day simple moving average at 484, similar to how it did in February. You can see it bounced off the gold line, and so that's the downside risk. If it breaks below the green ascending support line, it needs to hold that middle Bollinger Band at 50.23. Now, if it breaks above the red line here, which it's trying to do right now, and it turns that level of support, that's your signal that it wants to break out higher. So currently it's all about 51.50. Notice the upper wicks on all these candles are hitting that level. That's the closing price from back here in the first week of March. If it can finally close above 51.50, that's when you should see that run back up to the 52.50 level. Okay, let's look at LEDS. We're going to shift gears a little bit here and finish it up with some small caps. Okay, so this is a stock that I showed last night in the video, and check out how it did follow through today with another update, but it was a bull trap today. It did close up 39%, closed at $6. We had alerted this in the chat when it was down here and heating up, and I put out more alerts. But the thing is when I was putting out the alerts in the chat, it always came with the disclaimer that there's no volume, that it's moving higher, it closed above, whatever, the EMA's 4 and 8, and it's heating up, but volume is super low. But check out what happened today. The big volume came in, and so they walked it up on light volume, the pump, and then today they had the big gap up open, and then they ran it up to 875, it dumped a bunch of shares, and then anybody that bought up here trapped. And so this is what we call a bull trap. When we put out alerts to lock in gains today at the open, so it does pay to be in the chat. And yeah, you could see here that this is the bottom of the gap is low of day from yesterday, and the top of the gap is high of day, or low of day from day today is the top of the gap, and high of day from yesterday is the bottom of the gap. And so basically, if the candles work back into the Bollinger Bands, the upper Bollinger Bands down here at 531, if the candles work back into the bands, then they could come down and fill this gap. You have EMA 4 down here at 463. Many times when the candles work back into the bands, they hit EMA 4. Notice the candles have been riding EMA 4 support higher. And then notice that's also lined up at the bottom of the gap, and then the 100-day simple moving average at 428. So the downside risk is it drops down here and it tests this 425 to 450 support zone. And so when we see a black candle form, especially after a gap up open, and especially above the upper Bollinger Band, and especially during an uptrend, these are all the red flags that you just want to lock in gains and head to the sidelines, and you definitely don't want to chase, especially since this is such a thinly traded stock. Companies like this, they use the big volume spike day to dump shares, and then the volume dries up and it becomes really tough to sell. Everybody fights each other to get out, and that creates a downtrend. And so if you look here at the LEDS 15-minute chart, you can see all the magic, all the volume happened at the beginning of the day. It had the big gap up open and the run up. It was the first 15 minutes, it was only 15 minutes that people were able to get these 8s, but notice they were able to do their magic and unload all their shares up there and get a crazy high value, when just a couple of days ago it was trading trading at $3 with zero volume. And so this is a pump and dump. You know, they pumped it up, they dumped it, and then now you got people trapped. And then so basically it closed below the middle Bollinger Band. That signals downside risk. You've got the gap to fill, which is between low of day today and high of day yesterday. And so what's likely to happen is to get a drop down to this 50 simple moving average at 520, and then when that breaks, it's going to drop down to this 100 simple moving average at 435. I mean, I would be shocked if this did not come down and fill that gap. Okay, let's look at ARGS. Okay, this did close up 45% today. So yeah, this is a big move for ARGS. This is kind of happening across these you know, small cap penny stocks, especially when you've got them in the healthcare sector. Okay, so that's a really popular sector that's been beaten up, that they're trying to pop. And the same thing with the energy sector. A lot of those have already been running. So keep an eye on the healthcare stocks that are like ARGS that have been beaten down like this. And yeah, today, you know, yesterday there was the doji, right, with during a downtrend. It looks like it did form a bullish Harami reversal pattern. You know, I'm not sure about the you know, I didn't check on how the patterns were all playing out here, but the bottom line is a big white candle formed today, and it closed above EMA's 4, 8, and 13 and the middle Bollinger Band. As long as that middle Bollinger Band at 101 holds, then it could start a new uptrend. The risk is that down here in March, back in March, it closed above the middle Bollinger Band, and then a red candle formed, and the downtrend continued. So if it drops back below $1, it will be a risk to hold. It's only in play if it stays above $1. You know, you will know that it's trying to get a bullish change in trend if it gets another white candle above that level. And then the next key level to break is going to be the 50-day simple moving average at 132. So that's the target if it can hold that $1 level. Now, if it drops below, it will be a risk to hold. You can see back here in January, it got above the middle Bollinger Band, did run up to the 50 and 100-day simple moving averages, tried to hold support here, but pulled back. Back then, though, the 50 and the 100 were really close to the middle Bollinger Band, so it wasn't a big stretch to hit those levels. But yeah, that is the upside potential, is, you know, being able to bust through and make a run back up to that 100-day simple moving average. If you look at the 15-minute chart here, you can see it really broke out above all the moving averages, you know, breaking above the 50 and 100 on the 15-minute chart signal that was heating up, and then it got above the 200 and then above the 300, you know, just firing on all cylinders. Right now it's above all the moving averages. You know, the one red flag I'm seeing right here is this long upper wick. You know, there was some profit taking off of high day. You want to see it once again stay above that dollar level. If it could stay above $1.03, that would be the most bullish. If it could keep EMA 4 going. Notice EMA 8's down here at 99, and so it's all about that dollar. You know, if it pulls back tomorrow, bounces off of $1 and holds, it could keep going. If it breaks below that dollar, then you're looking at the middle Bollinger Band and the 300 simple moving average on deck. You know, it has to stay above those levels to keep this uptrend going. Notice, you know, it had the increase in volume into the close, and then you've got the you know, the golden cross here with that 50 simple moving average crossing the 200 simple moving average into the close. Okay, let's take a look at EYEG. Closed up 25% today. So yeah, notice how I was just talking before about the black candle, and so yeah, this is what I'm talking about. You know, you see you have the uptrend. You know, this didn't form above the upper Bollinger Band, but it did break above the upper Bollinger Band and pull back, and then it had the red flag of closing below this 50-day simple moving average after trading above intraday, all red flags. And so closing back below the middle Bollinger Band, that signaled downside risk. Notice it worked its way all the way back, ended up closing below the prior close at 35, and then you know, bounced today. And so now it's all about holding 39. It has to stay above EMA 4 at 39, and then breaking that EMA 13 at 41 level, that orange level, that orange line. If it can get above that, then the middle Bollinger Band will be the big level to break. So if it can stay above 41, it's all about 45, and then you know, trying to turn that level into support. It still hasn't closed above the middle Bollinger Band since back here in March. So there hasn't been a close above that level in April, even though it did trade well above that level intraday. So there was big volume here. You know, you've got the big volume, and there was really good volume today for this thinly traded stock, and it held up above EMA 4. So keep an eye on it. It might be able to bust above 45. As you can see here on the 15-minute chart, it did get above all the moving averages. They're all converged here between 37 and this 41 level, and so you want to see it stay above 40 41. That puts it above all the moving averages on this chart, and then it's all about 42. 42 was the high close here from 1145 today. If it busts above that level, then it should run up here, test this 45 zone, and then it would likely, you would think, but bust above and get back into this channel over here. And if it get above 49, then you're talking about that 58 from back here on the 6th. But it has to get above 42. Fail to get above 42 is going to signal it's not ready to go. And then if it were to drop back below these moving averages, that would be a red flag. Okay, so yeah, if you look at PVG here, this is a mining stock. We do have multiple mining stocks I posted in the chat today that were moving, that were penny stocks, and so that sector's been getting a bid as well. And this stock closed up 19%, and then you could see here it had that nice close above that 50-day simple moving average yesterday. That's the green line, and so the close above that level in the middle Bollinger Band signaled the chart was heating up. It's been in this sideways channel with this ascending support, so it was forming an ascending triangle type pattern, and then it busted through the top of the channel and through resistance today. There is an unfilled gap between high of day yesterday and low of day today, so you want to see it stay above the channel, stay above resistance over here, and turn that into support, stay above 750, and keep this uptrend going. It's currently hitting resistance from back here on the 24th of 24th of January, and so if it can bust through that level, the 100-day simple moving average at 872 will be the next target. Just above there is the 200 and 300-day simple moving averages, and then also this gap. There's a gap between low of day on this candle and high of day on this candle. A gap is a space on the chart. There's no candles here, and so many times when you hit the bottom of the gap, that'll signal the top of the run. So keep an eye on this this 915 to 950 zone. If it gets hit and fails to break, that could signal the top of this move. Okay, and one more to finish with is CELH. I thought this was kind of interesting. A consumer staples stock that's thinly traded has made a really big move today out of the blue. Closed up 19%. I don't know, maybe they had news today. I have no idea, but I just thought this was interesting that it made such a powerful move on this big volume spike for this thinly traded stock that's in a very, another defensive kind of category. Consumer staples, not a it's not sexy like technology, but it did make this big move, and it closed above all the moving averages today. So it's currently trading above all the moving averages on the daily chart, but it did bust above that upper Bollinger Band, and many times when that happens, the candles will work back into the bands. If they do, you want to see that 50 and 100-day simple moving average between 513 and 520 hold. Notice it's hitting this descending resistance line, and so if it can bust above this 560 level and close above, that would be really bullish. It would be breaking this multi-month pattern, and then you'd want to see a break above this 590 level. That was the high close here from January. A break above that, and then it could possibly work its way back up to 660. It had a really nice parabolic move in August and September, and so that was another reason why I thought it was worth taking a look at, because it has had a history before of making these types of moves, and the volume was so big. The red flag is if it pulls back into the bands and it fails to break this resistance level, that there's an unfilled gap between high of day yesterday and low of day today. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come to the chat. You've got to come into the premium chat, and so when you come in there, just send me a message. I'll send you a message, and then just please respond, and I'll give you a free pass. You can check out the chat and see if you like it. Okay, thank you.